Hi everyone. Before we start, I would like to do an acknowledgement of country. In the spirit of reconciliation, Bloom Impact Investing acknowledges the traditional custodians of country throughout Australia and their connections to land, sea, and community. We pay our respect to their elders, past and present, and extend that respect to all Aboriginal and Torres Strait Islander people today. Hi everyone, my name is Camille. I am the founder of Bloom Impact Investing. Welcome to a fantastic webinar today with the Impact team. So today we will be talking about impact investing right here in Australia, but also we'll be sharing perspectives on what's going on in the field globally. A little bit about us and why we do this. We are on a mission to make impact investing easy and accessible. And part of this mission is to offer educational opportunities and propel the voices of impact investing experts far and wide. And today we are in for a treat because we not only have one, but three of the most respected experts in the sector, generously sharing their expertise with us. Since early this year, we have hosted several webinars on the topic of sustainable finance and impact investing. We've talked about climate financial risk, how to measure impact, and how to invest with impact during the COVID-19 crisis. Even COVID-19 wouldn't stop us. The aim of our webinars is to bring a community of impact investors and agents of change together so we can build a more circular and inclusive economy. We also want to empower investors to access sustainable returns while making a difference. For this event, we have the privilege to hear from the Impact Group team to talk about the impact investing landscape here in Australia, but also looking at global trends. So before we jump in, let me introduce who the Impact team is and what they do. The Impact Group aims to bridge the gap between Queensland social innovation and impact investing sectors. Their goal is a thriving impact investment sector that fuels the growth of ventures, solving real-world problems for future prosperity. Impact Queensland is an emerging not-for-profit and convening power for later stage social entrepreneurship and for-purpose capital. The team at Impact Queensland provide advisory services, resources, education, and networks to facilitate deal flow and the growth of the impact economy across the state. That's what we want to see. Now, they also do Impact Ventures. Impact Ventures is a professional services firm providing investment, readiness, and capital raising support to for-purpose ventures looking to access seed and Series A equity investment. I know we have a few entrepreneurs on the line today, so today is your chance to ask a few questions about this. Now, the Impact Group is also developing an impact equity seed fund to provide capital to the state's most ambitious social change agents. So all in all, they are up to great work, that's for sure. But before I hand over the presentation to Jemima, I would love to introduce you to our speakers today because they have a fantastic background, and I just want everyone not to miss out on getting a bit of context. So today on the line, we have Lisa Siganto, who is waving at us. Lisa is the executive chair of Impact. She does a lot of other things, but she's the chair of the Impact Group. Lisa has worked in the impact economy for almost 20 years, supporting and investing in social entrepreneurs who are changing the world. Through her consultancy, Shorebirds, she has facilitated a number of large-scale partnerships projects that create social impact. She's the chair of Impact Queensland, White Box Enterprises, and Asylum Circle, and she's also a member of the Brisbane Angels. We have a few, I think, on this call with us. So hello, Brisbane Angels. Lisa was the founding Queensland Director of Social Ventures Australia, where she was responsible for a hub of more than 60 social enterprises and profit-for-purpose businesses. Formerly, she was a partner in consulting at Deloitte and a management consultant with McKinsey & Company. Lisa has an MBA from Harvard University, sorry, French accent, always hard to pronounce H. Harvard University, and an engineering degree honors from the University of Queensland. What a bio. We also have on the line Jemima. Jemima Welsh is the General Manager of ImpaQt Queensland, a convening power and deal facilitator for Queensland's social innovation and impact investing sectors. ImpaQt Queensland is currently in the process of establishing an impact investing seed fund for for-profit startups, profit-for-purpose startups, across the state. Jemima is also Secretary for the Queensland Impact Investing Scrum Task Force, run in collaboration with Queensland Chief Entrepreneur Leanne Kemp. Jemima has worked in the fields of international development, Indigenous education, and social impact consultancy across a range of settings. She has a master's in philosophy and public policy from the prestigious London School of Economics, and has a degree in international relations from the University of Queensland. She is also an inaugural Mercy Global Action Emerging Leaders Fellow. So thank you so much, Jemima, for being with us today. And finally, we have Anthony as well on the line. So let me introduce you to Anthony. Anthony is now the CEO of ImpaQt Ventures, a professional services firm providing investment readiness to profit-for-purpose startups across Queensland. Anthony has 25 plus years experience across local and global digital media and technology companies. This includes experience in public markets as a director and CEO, capital raising, global expansion, sales management, and strategic commercial experience across global and multi-channel distribution, media agency environments, and direct-to-market and governments. Anthony was the founder and former CEO of Manalto Limited, a US-based global social media management provider with operations in America and South Africa. He also has an extensive experience with cloud distribution and artificial intelligence, and has worked at Oz Email, BMC Media, SoftBank, Census, and Groupon. So, sorry for the long introduction, but we have really fantastic speakers, so it was important for me to take a minute to introduce them all. Quick housekeeping for those who've joined us while I was doing the introductions. Please note this event is being recorded. The webinar will be made available to the attendees after the event, but fear not, unless you unmute yourself and speak, your video won't show on the recording. So don't be shy and let your video on. We want this event to feel as lively as possible. You can ask your questions throughout the event by typing in the chat. Please indicate if you'd like me to ask on your behalf. We will try to keep 10 to 15 minutes at the end for you to ask questions to our speakers today. So without further ado, I am going to invite Jemima to present.
Great, thanks Camille. I will just bring it up. And it's, thank you so much for this opportunity. We're really excited to be here with everyone today. So thank you to everyone for joining us from your various houses and workplaces around Queensland, or potentially Australia, who knows. Okay, so can people give me a bit of a wave or a thumbs up if they can see a slide there? Perfect, great, okay. So yes, I'm Jemima. It's lovely to meet you. So I'm joined by my colleagues Lisa and Anthony. And at any point, if there are issues, Camille, please wave at me and flag them or questions. Otherwise, we'll just plow on through because there's quite a lot we've put together. Collectively, we've seen, we've spent quite a lot of time participating and directly investing in this sector. And we've watched the growth of this wave over particularly the last 5 or so years. So these opinions and these insights that we share with you today are our perspective, recognizing there are others, but this is what we've seen from our pretty diligent work in the sector over the last few years. And what we're finding is that it's a really fascinating time. COVID is actually, I think, prompting people to question business as usual and encouraging us to think about more thoughtful or conscious ways of doing work and also of investing our capital and how we spend our time. So we do see impact investing moving away from the fringes and into a more mainstream space, which is very exciting for us, but of course throws up a lot of implications about rigor and regulation. So this is basically the plan that we've got for you all today. There's quite a lot to get through and I'll try and remain conscious of time, but we'd love to have a chat at the end and welcome your questions. So I'd like to start by really talking about the global context in which this is all operating. And what we see is that it is becoming fairly well known. Impact investing is part of the vernacular now. And that's in large part, we think, because of climate change and, a real push for clean energy and divestment and also clean energy transitions. And I think that's what's elevating impact investing to, really high political levels. But from a market point of view, it's worth about $502 billion, which we think is a conservative estimate, but is really promising. We are seeing the rise of a lot of private equity funds as well. And COVID is likely to encourage that trend. We do see, for example, the launch of the international the Response, Recovery and Resilience Coalition, which is led by the Global Impact Investing Network. And basically that's a number of large institutions that have got together and are really looking at how capital can be channeled into, healthcare initiatives or making life better for people in a time when entrenched disadvantage is really at the forefront of our minds. So we're likely to see that trend continue. And of course, a number of private funds and philanthropic foundations are pivoting their focus to also respond. We've also got a large part, we've also got that's happening from the top, but then from the bottom, we've got a number of, millennials and Gen Zs taking interest in this space. And, some would argue that that's the folly of youth, but I am more optimistic. I like to think that actually it's an indication of things to come. And as we see this younger generation moving up and becoming more economically powerful and self-sustainable and inheriting quite large sums of wealth from the baby boomer generations, etc., that we'll start to see them make investment decisions that are actually pretty mission focused. And we do see that, a report from Deloitte last year said that social impact and ethics were actually the main reasons why young people changed their relationships with business and, of course, capital as a result. So there's a number of funds that I've put down here, and of course, we're happy to share these slides. I'm only touching on things here. Okay, moving down, hopefully. Okay, so in Australia, what does it look like on a tangible level? So we are seeing bigger deals in the market. For example, the consortium led by Peter Toner for the debt acquisition of the Australian Associated press to re-establish that as a not-for-profit. So that would be considered an impact investing deal. We've also got the launch of the Synergist Fund in Disability Housing by Social Ventures Australia. Of course, we've also got the equity crowdfunding deals, which are gaining, lots of popularity and I think are becoming quite well known. Sheba, Outland Dem and Food Connect all raised over $1 million. There were a few $1 million there, and the majority of investors there were all women. We've also got the Prime Minister's Social Impact Investing Task Force. So they've released an interim report late last year, and they'll be releasing their final report this year on how to really build the capacity and the infrastructure of the sector to enable it to grow. And that's happening concurrently with the growth of the social enterprise sector. We see the rise of ethical super funds and banks that have specific impact investing strategies, which is really exciting. And also religious institutions, and particularly religious communities of women, they are using their capital to invest in projects or assets that, or using their assets to support projects that have fundamental social impact, education, healthcare, the likes. And then, of course, we do see the growth of a number of really prominent and pioneering intermediaries across Australia. So Impact Investing Group and Impact Seed and Social Impact Hub, Impact Investing Hub. And that's really creating all the various touch points for this ecosystem to grow. All right. Here in Queensland, it's still a very emerging space, but people are becoming more aware of what impact investing is and gradually sort of putting up their hands and saying they want to become involved. So as Camille mentioned, Lisa and I coordinate the Impact Investing Scrum Task Force with the Queensland Chief Entrepreneur, and that's got a number of stakeholders from government and private investment firms as well. And all those people have really got together because they feel that there's something they can do to help build this sector. We're also in the process of creating an impact equity seed fund, because what we've found over the last few years here in Queensland is that while this sector is growing, we're seeing this bottleneck. So there's lots of social innovation going on, and there's lots of profit for purpose businesses or social enterprises that are growing, really promising business models, great founders, but they get to a point where they just don't know where to go to access the right capital at the right time. And so we see this bottleneck, and inevitably people fall off the bandwagon. So we're really trying to open that up by providing early stage seed capital. Also, we're likely to see a response to COVID, of course, and philanthropy playing more of a space there. That it's possible that we'll see a number of social impact bonds continuing, or payment by outcomes contracts. So they're just a modified, getting government to think, well, how can the private sector be mobilised to achieve what would otherwise be achieved through social welfare systems? And ultimately, all of this is happening in an environment that definitely needs to grow. So we're creating the water in which all of this can thrive, the right conditions, the right environment. I've kind of broken it down into these three columns. You know, I realise we're going through quite a lot here, but there are major trends that we're seeing in Australia in this space. And I'm talking social and environmental impact investing here. So who are the major players in this space that probably weren't there before? Women. You know, for example, Food Connect and Sheba both had over 95% of their equity crowdfunding campaigns, you know, of their investors were women. Similarly, Outland Denim, I think, had about 63%, which is pretty massive. So women, particularly retail investors, are playing more of a space there. Millennials and Gen Zs, of course, I'm biased in that regard, but I do think that there's a big interest. And of course, corporates and you know, big businesses are starting to kind of revisit their corporate social responsibility campaigns and go, well, how do I actually do that better? How do I leverage, you know, my networks and my resources and my my lay of the land to take an active stance in this space? What are we likely to see a rise in investment of or into? And that's probably going to be green and sustainable investing, which are those bigger deals that we see. Place-based investing, and if you're interested in place-based investing, Griffith University's Eunice Centre writes impact investing provocations, which you can find on LinkedIn, but they have a great article on place-based investing and how important that is, particularly in Queensland. And of course, COVID-19 recovery, which is the top of everyone's minds at the moment, and how does a disadvantage look in the next few months to years? And then how are we going to do it? Well, there's always, there is equity, private equity investing, and there are loans, etc., etc. But what are some new trends? Probably our thoughts are the equity crowdfunding space is really going to grow. People are noticing how powerful retail investors can be and harnessing your crowd. And also philanthropy. Philanthropy is taking more and more of an interest in this space, and they've often got, huge use. So we're probably going to see more of that happening as well. But that's enough from me. I will hand over to Anthony, who is going to be looking at the impact readiness space in Australia.
Hey everyone, and thanks for your...
Over to you, Anthony.
Yeah. Are you going to change the slide, or is it...
Yep.
So hi everybody, and again, also thanks for your
You there,
time.
Anthony?
Yeah, can you hear me okay? Oh, can you hear me okay?
Yeah.
Hello? You can? Okay, cool.
Yeah.
So thanks for your time. So, there's some bullet points up here, but, I'll try and summarise a little bit. I spend a vast amount of my time talking to investors across the whole spectrum, from retail through to family offices and private equity. And there's no question there's a very large and growing interest in the impact sector. I think the issue is at the moment is that we're in such infancy right now. And what I'm seeing typically from these investors is that there's still a very large emphasis on your usual sort of financial modelling, your financial growth, your total addressable markets. And the reason the focus is there is, I think, because, A, it's a comfort zone, but also, I think more importantly, the whole impact measurement. We're still at that educational part of the curve where a lot of people are saying, well, talk to me about impact. How do you measure it? How do you know it's having an impact? How can you demonstrate that? And in some circumstances with some companies, it's quite a tangible sort of impact if it's recycling plastic or recycling water, or it's employing employment and things like that. So you can kind of point to it, but the intangible side of impact measurement is quite challenging. And look, I don't think this is anything new. It's just all a part of the maturing of the investment community into impact. But back to, some of Jemima's, points earlier, we're definitely seeing a growth in this. We're seeing a lot of interest coming out of, a lot of the investors across the board. So, for us, it's just a matter of continuously trying to package up these companies in a way that makes sense to these investors, start to educate them on impact and how we're measuring it, and how we're going to continue measuring it, and also putting forward the argument that this impact is a continuous thing, and it's going to continue to grow, so it doesn't sort of have too much of a ceiling on it. And how does that feed back into the financial return, which is what at the end of the day is always going to be a key driver from anyone who's investing in a company. So what are we seeing when we're doing this? So we're putting deals in front of investors, and it's driving, but I think this is a general statement at the moment, probably driven by COVID, but we're just seeing a much more detailed level of due diligence going on. They're really, the investors are looking for a real market differentiation. And I honestly believe this is a big part of where impact can play, because with an improperly positioned and well packaged impact company with a good distinction can really set themselves apart in the market. I mean, raising capital is an enormously competitive exercise. As I was saying before, is there a sustained competitive advantage? So if we took this business from Queensland to Australia and then Australia to the world, will that impact continue to grow? and those type of things, personal conviction of the people running the company, and then all the usual sort of things that investors look for in any company is, the management team's credibility, their background, importantly, who's the board, what type of directors are on this, are they invested in the business? So it's everything they look for, the perfect world where it's minimal risk and maximum return. And they are looking for the maximum return on impact as well. But again, it's back to sort of trying to do the best we can as a community, in its infancy, to educate these people on what that all means and what it looks like. The reasons against investing, it's really a confidence thing, particularly at early stage companies, right? They're really backing the founder, they're backing the idea, they're backing, what they, feel, has a real potential for success. If they're not confident in the way the business is structured, if they're not confident in, the way the board's structured and the financials are structured and all those type of things, then typically they'll consider it a high risk. And if we can't educate them sufficiently on the impact measurements and what it means, then, with impact in particular, obviously that becomes an issue from making decisions on investment. So that, they're the type of things to sort of think about is, we're just, investor readiness as a global statement. There's just a lot more rigor now around getting your company ready to go and get investors to come on board. And they're really sort of diving quite deep and hard into those data rooms and into that due diligence. We've got a couple of clients now that we've been going through due diligence now for well over a month, and I would argue that with a few of them we're still only about halfway through that process. Which has been a bit of a surprise, frankly, given some of these companies and where they sort of sit in the marketplace. But that's what we're finding. So as founders, which I've been a founder, and as business people, we've got to, consider all of these sort of things and be ready for it. The other side thing to consider, and it's a part of the process that we look at when we're working with companies, is, where are you at with your business, and, what's your valuation? What do you believe your valuation to be? What round of investment are you looking for? Is it, you're still at angel investor grants, or are you looking for seed money? What type of seed money? There is good money and bad money out there, so it's really important to sort of determine the type of capital that's going to be suitable for your business. Is it wholesale or retail investors? Is it crowdfunding? How do we approach that? And what's going to be delivered as a result of picking up that investment? So all of these sort of things, it's important to consider where you sit on this pyramid as you head to the market to try and raise money, because it does make a big difference to the success of a capital raise.
Great. Thanks, Anthony.
No problem.
You happy to hand over to Lisa now?
Yeah, Lisa, take it away.
Always. Hi, everybody. We see a lot of familiar names in that audience, so it's great. And we know that you could be speaking here as well. So, but I suppose that's part of this, where we are in the life cycle. We're still emerging, it's still happening, which makes it fun as well. And we're learning off each other. What I thought I'd do here is just talk about some of the organisations. This isn't comprehensive, but they've all got stories. And for me personally, I'm a small investor as well as the intermediary. I get a real thrill about finding new organisations that are going to solve big social problems, have that potential. So that's what gets me going every day. And the reason why we're doing a fund, which is at the end of all this, is to be able to drag through these organisations. It's a huge missing gap in Queensland. So we're pushing for that. So I'll just start with debt capital, because we can put that in a corner, and ones that are often mentioned, but for those who are sort of new to this sector, Good Start was in 2010. And it raised over about $30 million from social investors to provide debt. And it was at 12% because they couldn't raise the money. And I was lucky enough to be, an investor at the time, and got my 12% for 3 years. And then they quickly paid us back once it started doing really well, and that was a high interest rate. But that's often put as one of the first big examples of impact investing in modern times. Vanguard, again, for those who haven't heard of it, is was raising money up to $7 million for capital to build a laundry, to wash sheets, to create jobs for people with experiences of mental health. Now, it took 71 funders to get to the $7 million of the first Vanguard. There are proposals for new Vanguards, and everyone gets it, they can see it. They know it's tangible, and that's not a problem. The highest interest rate that was paid for that debt was 5%, which was pretty tough at the time. Jigsaw is an organisation that we helped come to Brisbane. It's a not-for-profit. It helps, it employs young people with disabilities who do document digitisation. It's a fantastic business. And we helped procure a loan of 5% and $400,000 to basically give them working capital to grow. We've helped Balm Services, which is up in Cape York, and we've also helped World Wellness just a little bit. They are all not-for-profits. Balm Services actually is both. So that's sort of like the debt story. Over on the equity story, which is what we're very excited about, of this for-profit, for-purpose organisations who need equity, want equity investment, and how do they do it when they're starting out. So as both Jemima and Anthony have talked about, equity crowdfunding has really come about. Outland Denim just raised, I think, $1.3 million. I own, I think, 0.02% of Outland Denim, so I'm a major shareholder. But it is, this is sort of the future, or one of the futures, and it's a really good pathway. Refugee Talent and Smart Blocks we supported through a QUT Founders Fund, and they were both great, really entrepreneurial, had fantastic ideas about how, in terms of refugees, how do we provide a employment service that catered for really talented people coming into Australia, and set up a wonderful platform. They raised capital. The CEO is just amazing, here from Queensland. And Smart Blocks was about solar, sort of like big Lego blocks going together. Food Connect, we helped as well, and they were, one of the first with Pledge Me, first equity capital raising, which sort of started the field here, which made it all very exciting. I think what we're finding right now, which is sort of surprising, is that this pre-investability phase, which we heard from one of the organisations on this page, has said that this is the piece we underestimate even more. It's enormous, of like getting it ready to so that investors, will put money in. What we've found is, or what people think, and we've had this in the last 2 weeks, Anthony and I had it, where someone's got a great business idea, it's really not developed very much. It sounds fantastic, looks really great, but they want someone to just give them $1 million to move on. And we said, well, no, you've got to actually do all this hard work first. So what do you need? Anthony covered some of this, but you need the strong entrepreneurs. We're always looking at that. You need the intentionality. Are you really doing this to create social or environmental impact, or is that just sort of a side issue? I'm always looking for clearly articulated business models that make sense. These days, you really do need a really good pitch deck and video ready to go, like now. Robust financial forecasts. You can't just get away with 12 months finger in the air. And then behind it, you are going to have the investment documentation. And then impact measurement plan. And this is this whole area, which Queensland really, agreeing with Anthony, we really don't do very well at the moment. We can do, there are some, we've got experts, and some of them I can see in this audience. But, how do we have a cohesive approach as a state, and why do we need it? So, there are all sorts of ways you can do impact measurement, and there's no right or wrong, and there's no standard, and these are some of the things on this page that are used. So there is best practice, and some of the best practice is very much that you have to have a theory of change, and you have to know what your outputs and impact are. And, why are you doing what you're doing, for what reason, and how are we going to measure the impact when we can? And then in measuring the impact, there's all sorts of ways you can do that. But really, overall, it's like a cost-benefit ratio. You know, what are you going to get for the investment? And when you've got investors, philanthropists who are now looking at impact investment, they want to know what they're going to get. And they might forego some of the financial returns, but they want to know what that impact is. And, you know, there are all sorts of ranges in terms of impact measurement. The Rolls-Royce at the moment, and I'm obviously biased, but I've had no investment in it, is Vanguard doing 3-year huge longitudinal studies of every single thing that's happening in that organisation. Oh, we're in the dark. And so that's the Rolls-Royce versus, you know, you might do something on the back of an envelope, but at least you've done it and you've got some estimates of what you're doing and therefore why. I sound like a school teacher. It's just that it's really important. And for, you know, in your pack and in your pitch, impact should be part of it. It should be addressed and have like a social value statement of, you know, why you're doing what you're doing. There are different reasons for doing it. Both basically investors will want it. They're not too, you know, it's early days at the moment. They don't really know what to ask for, many of them. Management purposes, you know, what are you going to do going on? And then also reporting purposes, and future governments will really require it. I think on the next page. So, you know, we're just, even though we're committed to this area and we're working it all the time, we're still sort of pulling things together. These are some things that are that we can point to that we really rely on. So Ronald Cohen started this in many ways, the Impact Revolution, the On Impact book. Kathy Clark is Duke University, and she's put forward as like the guru in the world, and that's her stuff. Start Impact Capital case. We find the Innovation Blind Spot really interesting, which is about different uses of capital and why use capital. Impact Investing Hub is, you know, a fantastic organisation based out of Sydney, but doing stuff for all of Australia, and we highly respect. Tonic is the sort of the measurement group, sister group to, I'm going to tell that story, sister group to gin. Jemima just got that yesterday, that joke, that was gin and tonic. So she's my guru, but here you go. So Tonic is the other group. It's based out of San Francisco. It's amazing. And we're developing an impact investing playbook, which is primarily for the founders, but also for the investors of these are the things you need to tick off. We just found that there's nothing that exists. Camille's got her hand up. 5 minutes. Anyway, I'm done. I think how to get involved. Here in Brisbane, some of you, Monica's there, some of you are already involved in CHEO, which is really about how do we as female investors and heads of ventures, you know, help each other and change the models. Brisbane Angels is a good sort of ground level place to go, and they're getting better at impact organisations. We're having started impact investing meetups, you know, like this. Impact Boom is a good place to go in terms of the first steps. I saw Elise is here in the audience. So Queensland Social Enterprise Council is doing a fantastic job of Queensland's first social enterprise strategy, funding for social enterprises, connecting, networking, resourcing, all of the rest. And email us. And then I just have to do a plug of partners. We wouldn't be here if we didn't have English Family Foundation right from the very beginning, who see us as that this is catalytic, and that, you know, that they've been prepared to continue supporting us for the last 2 years. We've got a good relationship now with On Market, which is crowdfunding, and they've been quite interested in some of the ventures we've been helping. We've got relationships with PwC and Office of the Queensland Chief Entrepreneur, and then Avestics, who's a great organisation here in Brisbane. So we're very thankful for that, but we always want to just make this a bigger community, and we just want to see more impact investing. So however it's done, that's what we want. So yes, any questions? I think that's what Camille's messaging us.
I might stop my screen share, Camille, so that you can jump on.
Oh, good. Thank you so much. What a great presentation, and lots of insights around what's happening right here in Queensland. I don't think many people know all those beautiful deals, and you mentioned Vanguard Laundry. We have right here in Queensland people setting the benchmark almost at an international level. So that's great to see. While everyone is wrapping their head around the question they want to ask, I think that they're a bit timid today. We usually have lots of questions. I have one. So this meetup topic was around what's going on here in Australia and what's going on globally. Do you see further collaboration happening across borders? And if yes or no, why is that and what are you observing?
I think Anthony can follow up. I'll just start. I think the huge, sort of obvious, but the huge market is Asia Pacific, and we're right here. And countries like Vietnam totally get this, and we're actually behind. Have you, Anthony?
Yeah, I definitely think, I mean, if you're talking nationally, you know, we're already doing that. We're talking to a lot of, you know, companies that do similar things to us around the country. You know, there is a bunch of other people trying to get some funds and proper investment models developed, you know, measuring and metrics. You know, so there's a lot of activity happening in this sector. We know internationally, you know, have spoken to Peter Adams from Rocky Mountain Ventures quite a few times. He's just spinning up a new impact fund over there at the moment. I think it was circa $100 million fund. He's looking to do some co-investment deal flow swap between, you know, the organisations, you know, and then you can see what BlackRock's up to at the much bigger end of town. You know, so look, no question. I know in Singapore and places like that, there's an enormous amount of interest in the family office and the high net worth sector to look at impact deals. We send deals up there, you know, weekly, you know, to get looked at. So look, definitely, you know, there's cooperation going on across the place. I don't think we're at a point yet in maturity where, you know, the whole competitive thing's necessarily a big issue. We're all sort of trying to work together to make this happen, and, you know, the competition can start later, I think, once we mature it.
Yeah. There's a question from Vinny, and I can't see Vinny, but I know Vinny, about the returns. So we talk about a spectrum and that there's nothing set, but we do start out saying it should be that there's market returns, there's a financial return, and there's a social impact or environmental impact return. And it can depend, but we shouldn't be underselling any organisation to sort of say it's only a small financial return. However, in the debt markets, which is a bit different, you've got a whole range from debt that's foregone and what's the word? You let it go if yeah, you're right. It's like debt can be from like zero up to, you know, quite high levels. And it really depends on, you know, who the investors are. But we just basically say you want a financial return and a social impact return. Excuse me.
I can also see that there's a question from Ruben about is there a trend of what kind of impact attracts investment? And I think that's a really good question. I mean, internationally and nationally, we see that there's a big push for that, you know, the bigger buckets of capital to go into the green space, so clean energy, environmental sustainability, plastics recycling, etc. And that's probably likely to continue, just because that's you know, that's kind of big tech and big machinery, and you can feasibly make quite a big profit out of it if done well, particularly as we transition to renewables. So that's likely to continue. We're seeing here in Australia that there's a big push around healthcare and mental health and well-being. You know, I think I've been reading lots of articles coming out of COVID that say, you know, mental health is just going to be such a huge issue. And we meet a lot of investors who, you know, they're sort of, you know, their eyes light up when you talk about mental health and well-being. And also food production and agriculture. I see that as huge as well. Yeah, and the different forms that can take. So I think it also you know, it comes down to finding your tribe, and it comes down to something Anthony said about finding the right investor for you. So if you're a venture and you operate in the employment space or, you know, the healthcare space, find people who resonate with your mission, who get it, who are passionate about what you're trying to do, because that's the other thing about impact investing. It's got to work for you as a venture as well. So, and you've ideally got to find the right team behind you that can help leverage this forward.
I think to add to that, Jemima, is, you know, it depends on the advisory group that you work with, right? But you'd hope your capital advisors, you know, they've got a big enough network of investors where, you know, if you look at someone like On Market, if you've got a business focused on healthcare, they know who their investors are that like healthcare, right? And they know the ones that like environmental tech. So they're not going to take a healthcare play to the environmental tech investors, right? So you kind of, it's about, you know, making sure when you're talking to your, whoever it is you're going to work with to go and raise the money, you know, for you, that they actually understand who their investors are and they're not wasting your time or the investors' time with you know, decks that are irrelevant to them or aren't going to attract investment. So, you know, this is, again, comes back to your whole investor readiness play, right? You know, where all of that sort of stuff's got to be identified and you get quite targeted. So I think there's investors out there for every type of business. You just got to know where they are, who they are, and go and target them.
So I'm sorry, I wanted to ask a question, and I hope it's all right. I'm unmuted to do it. My name is Mike Gear, and I'm based actually in San Francisco. I've been following these meetups since Camille, I guess, has been doing them for a few weeks. They're fantastic, and you've covered some great topics here tonight as well. I guess the question I might ask is, you know, I actually know capital markets quite well. So I'm a former banker, worked actually advising on some big IPOs, did investor relations work for a while. I've been in Silicon Valley for about 10 years where I've, you know, gotten very much embedded in the venture ecosystem here and have worked with venture-backed startups. You know, through this, and I should say as well, I've experienced in the markets that are interesting to me today from an impact perspective as well, which is to say emerging markets. And I guess the challenge that I'm finding here, and I could use some guidance on, is really where to find these impact investors. And, you know, you mentioned, for example, your capital advisor. I can say that in this market, venture-backed firms in Silicon Valley, having a capital advisor is regarded as a liability. That if you as a CEO can't raise capital yourself, you probably shouldn't be doing the job. And so maybe it's different in the impact world, I don't know. You know, but there's this whole sort of everything from profile building to, you know, to the introducers that are part of the ecosystem here that are all relationship based, that, you know, in the impact world I'm not familiar with, but I've been going to SOCAP and so forth over the years. I'm just wondering, you know, if you can comment on, like, you know, is a cap intro person, you know, who you need in the impact world? You know, should you be going to the corporate VCs as the first point of contact, you know, the ones like the Patagonia and so forth, or do you go directly to, you know, philanthropies, or do you look for, and by the way, I've got a profit for purpose, you know, kind of a startup, I guess you'd call it that.
Excellent. I might start on that. Mike, thank you for the question. It's a great question. I don't think there's any, you know, right answer. I can tell you what we've been trying to do and what we see in Australia. It's sort of started, the interest has started from the philanthropists and the family offices. And, you know, they're the ones who put down sort of the first whacks, even back in Good Start days, which was 2010. But I think it's getting people really interested in this and understanding it. And I think that's a major driver of why we need funds, because, you know, having a fund which aggregates a number of investors can only be good. And, you know, we've talked about the crowdfunding, which is showing that at a very sort of micro level, people are really interested in this, but so how do we aggregate it? So I think we're in that move right now from the philanthropists and the family offices and the high net worths into funds. And we don't have, there are a few impact funds, but not many here in Australia. And there's, you know, there's growth for it. And there'll obviously be other mechanisms, and at least it will, I think, change the market and change the behaviour. Do you want to answer that, add to that, Anthony?
Yeah, I mean, it's funny, Michael. I spent like 5 years running my last company in the US and raising money, and I had an advisor over there that did it all for me. So it's curious that maybe it's changed a bit culturally in the US, but certainly here, depending on the stage you're at, if you're still at a family, friends, angel level, or even a seed level, then a lot of the onus does fall on the CEO to try and find that money. But once you're sort of getting up into that genuine seed level and beyond, you are typically appointing a group of people, from my point of view, being a multiple founder of companies, I treat my capital advisors, the people that are going to help me raise money, similarly to the way I do my lawyers and accountants, right? They're professionals. It's what they do for a living. They've got in big investor networks. They know where these people invest, why they invest and how they invest, and they take you there accordingly, and they take their fees along the way, and it's just got to be budgeted in as a part of your running costs of your company. So, and it's certainly how I functioned over there and in Europe when I was raising money was exactly the same sort of way. So, I think depending on the capital raise level you're at or where you are in that cycle determines a lot of those sort of things. As to when you bring people into the mix to help you go and raise that money.
I'll add just very quickly, and then I'll mute. It's a great point. It is about stage. I would say that until you've got institutional capital behind you, meaning like Series A institutional capital in the Valley at least, you're not going to get a lot of people really pushing to assist you with your raise, and that is when the onus is on you. Once you have your Series A and other institutions, then they're all looking for someone to come in and set evaluation. So
right.
They're eager to have anyone else in the mix who they can get to help the process. That's understood. Okay.
Sure.
And just to answer that, we know, and Shari's here, she's been involved in this, but we know that the super funds here in Australia really want to invest and have invested in great social impact stuff, but they're looking at the big stuff, $10, $20 million minimum investments. There was a question about, about impact measurement. One of the questions from Craig was, how important is it for Australia or the market generally to have standardised measurement framework? I think we could talk about this all afternoon, and Anthony and I have different opinions even in our team. So, but we need something is the answer. And those green KPIs, yeah, that'd be fantastic. Sorry, we need some consistency and some common language, and at the moment we really don't. So how this morning I was talking to someone about a fantastic idea, if it could only happen, of having the Federal Office of Social Impact that actually does measures, and it's across the country that we're all new about, and we could actually measure the evidence together, and that would be useful as instead of as well as GDP. But I think just some level of consistency would be good, and some standards of practice would be good.
Can I jump in, Lisa? What do you use? So right now we're missing standards. What do you use as a framework to bridge this gap right now?
Yeah, we're doing everything really from first principles, which is not really great. And we're insisting that everybody has this a theory of change, and then we're looking at the impact, the outcomes of the impact, and then we're doing proxy values around those and saying, well, this is what it is approximately now, and this is what it's likely to change, and show us how you're going to do that. And we have got, through some pro bono assistance, access to the Australian
Social Value Bank.
Yeah.
So that's a really interesting one to look into if you're a social venture. Social enterprise. Australian Social Value Bank is really just an aggregation of values from across the country around things like demographics, healthcare, education, and the impact of those in terms of financial proxies, which is really helpful when you're going to investors and you're talking in those capital terms. In terms of what do we look at? I mean, we look at the Sustainable Development Goals, obviously, but what I really encourage people to do is to drill down into those. So the UN actually has produced a massive document which goes down into the SDGs by, minute kind of sub-points, and you can use those as indicators for your work. we also draw on a bit of a framework that's set out by the Impact Management Project, which is basically a coalition of kind of big institutions connected to the UN that are trying to put together some common language and framework in this space. But they encourage you to look at, you know, well, what is the contribution of this work in terms of how does it change what is likely to have happened anyway? So if I hadn't put capital into this, or I hadn't gone out and done business in this space, what was likely to happen regardless? And kind of looking at that change, which is really interesting when you kind of consider different contexts and environments. And then also in terms of different, I mean, there's lots of tools out there. They all basically stem back to a theory of change. So get your theory of change. It can take half an hour, or it can take 2 days. It's up to you. And, you know, Sandy Blackburn-Wright, I think, was talking 2 weeks ago on this platform. She's fabulous in this area. So, and I think she has lots of resources on her website as well. So there's lots of information out there. GIN also has Iris Plus, which is their online system, which gives a bunch of indicators. So yeah, there's lots out there.
Great, thank you, Jemima. Great answer. And yes, I do encourage everyone to have a look at Sandy's great work with social outcomes, and we also have a recording that I will make available very soon on how to measure impact with her. So I'll definitely share that. We have a small admin question. There is some interest for the impact investment playbook, and people are asking what is the email address that we need to email to receive it. So Jemima and Lisa, let us know, and I'll make sure to share this email with the group. We have also a comment about finding a common language. So someone is commenting and saying perhaps a matrix approach to approach the nuances of the audience, the regions, and the state. So that was a good comment. I'm just flicking through the questions.
Camille, can I just add to that? I think the matrix and the nuances idea is really important. Thank you, Elise, for that, because it comes back to that point about place-based investing as well. I mean, you can pull all these indicators out of the air from, you know, the SDGs and GIN, and great, they're great. But what we really want to encourage people to do, and investors to do as well, is go, well, what is the change that I can create within this particular sphere of reference? And impact measurement isn't just a token thing, you know, that's kind of you do to get capital in the bank or you get your business over the line, but it can be really powerful for looking at systemic change within particular locations and geographies. And I also, you know, we had a great, I know Craig is on this call, we had a great chat with Craig last week, and he offered some really fascinating perspectives on, you know, First Nations impact measurement, and bringing in really nuanced cultural understandings to the impact measurement space. So I don't have an answer for that, and I don't necessarily know how to do it, but I think if we can start to think in those terms, it's also valuable.
May I jump in and tell everyone that next week we have a fantastic event on connecting finance and natural capital. So we'll touch on this topic. So yeah, join us. We'll have Fiacha Kearney, the CEO of Forever Wild, who's doing great work in this space. So if you want to learn more about this topic, join us next week.
I suppose we're just about to wrap up, but I just really encourage everyone with questions, feel free to email us or email Jemima.
Email me.
And, you know, we are in a learning environment here. So, you know, if there's things we should know about, you know, please let us know. It's a great community to be in, but we'd love to hear more from everyone.
Thank you so much, Anthony, Lisa, and Jemima. You're right, we are approaching the end. It went really fast. I would like to thank you for these great insights, great presentation, and yeah, great answers to our audience. Thank you. I will be sharing the email in the group later on if people want to connect with you, but I cannot emphasize enough how much ImpaQt is doing for the sector, and I personally enjoy a lot my interactions with Jemima, who's a star in this space. So yes, please do get in touch with the ImpaQt team. Very quickly, before we wrap up and go on with our days, I would like to share with you quickly that we have an event next week, again on connecting finance with natural capital. Tuesday afternoon, same time, just an hour, join us. And then on the 23rd of June, we will talk about super and how to use your superannuation to make a positive impact with Adam Verwey, the director and founder of Future Super. So that should be an interesting conversation. The superannuation fund is an exciting space. Lots of things happening as well in terms of impact. So again, thank you so much everyone for joining. If you have any feedback, please email me. I will tap my email address in the chat. It's been a pleasure connecting with you. And yeah, I'd love your questions every week. It's a pleasure to connect with everyone. So thank you so much everyone, and have a great day.